Hello, folks. Welcome to Pro Trader Strategies. It's Tuesday, July the 20th. We're an educational company here to teach you guys about the markets, some of the economic data, how that's impacting the markets, but most importantly, we're going to be talking about options and how we can implement those into our portfolio based on the assumptions we come up with our market analysis. And no, we are not just saying, hey, a bullish assumption, you go out there and you buy a call. No, it's not that easy. What we have to do is know what the pricing is telling us in the option montage. And I show you how to spot that quickly in webinars. I go into details on every single one of our option strategies that we like to implement, and it'll show you how to spot the best strategy for any given assumption. I'll show you how to do that in those videos, so please follow us at ProTraderStrategies.com. Hey, as a matter of fact, hit that subscribe button right now so that you get notifications when we're shooting these videos. Yeah, every day I'm going to be trying to shoot these at about 11:30 Eastern for what I'm going to be talking about, the daily trades that I'm looking for. And then I might pop on a little bit later on in the afternoon. If I find a trade that I'm going to implement, I'll go on live, and that way you'll get a notification when that's happening. And Thursdays after the close, that's when we do our webinars. We really drill down on every option component. So please check those out. And throughout this video, comment over there in the wherever it is, comment section over there on the side, so that I make sure that you're clear of concept before we're moving on. If you have a question, somebody else probably has the same question. So please reach out, and I'll even circle back around if you're watching this on tape delay, folks. All right, so let's talk about the overall economic data, see how that's impacting the overall markets. We can see here, crude oil is starting to find a little bit of a bottom here. Now, I talked about this. The weakness in crude oil is likely due to two things here. We've got some manufacturing issues, although China's starting to come out and say that, hey, those chips that the Ford was looking for, well, they're starting to all of a sudden find some of those. Well, I talked about this when we heard about that first chip shortage. There's not a chip shortage over in China. There's only a chip shortage to the point of delivery, which at this case was, we were talking about Ford. Well, now all of a sudden those chips are starting to show up. So I think that Ford is going to benefit from that. I'm going to talk about a couple of trades here in a moment. About, the best in breed in some of these cars, autos, or let's say the autos, airlines, and tech sector, okay? All right, so let's get on with the overall markets, because there's not really a whole lot of economic data I'll talk about here other than, well, let's just talk about it since I'm going to mention it anyway. Building permits. Remember, these are permits pulled for housing starts, and that doesn't really give us a great indication as to how many houses are going to be built, because you can pull as many permits as you want. It's just a matter of whether or not you build on it. Well, the permit number came in lower than expected, just slightly higher than 1.5 million permits pulled for last month. But the thing that we're really looking for is the housing starts, and they're actually acting on some of those permits that they might have had backlogged here, because they came in and started with 1,640,000, expected to be 1,600,000. All right, so they did start more than they were expected, but they're pulling less permits. That isn't really going to influence the overall markets. Housing starts, though, should give a little bit of boost, because that means that the builders are seeing more demand. Now, obviously, they're slowing down on the permits. Maybe they're thinking a year or so down the road, people will start slowing down on the housing, so they're slowing down on pulling the permits, but they're building anyway on some of those backlog permits that they might have sitting there. All right, and that's about it. Now, later on in the week here, we're going to start getting more economic data that is going to really start driving these markets. We've got crude oil inventories. That's obviously going to be affecting crude oil here, wherever it is. No, there. That's how we do it. All right, so we'll be getting crude oil inventory numbers. I think that the driver of this is going to be manufacturing numbers. So that's something we're going to keep an eye on. So tomorrow, crude oil inventories, probably a slightly less impactful number there, just unless it's really way out of whack, folks. I mean, it would have to be maybe 10 million barrels out of whack there in order to really drive this market. Why? Because coming up, we have PMI numbers, manufacturing PMI numbers out of the European region and here in the United States. But remember, those are PMI, Purchasing Managers Index, for the manufacturing sector. This is the person that sees the demand before anybody else and is going to either ramp up production or pull back on that production going forward. So those are the ones that we're going to really look for to drive crude oil and probably the broader markets across the board. But the major numbers coming out Thursday and Friday of this week, that's going to really be driving the markets. You know, yesterday and today I was talking about those are setup days that we're looking for. Yesterday I was saying the risk was to the upside in equities. We kind of stalled out there, but I was speaking for the turnaround Tuesday. Remember, today's the day. Yesterday was the selling pressure. Today we're seeing that turnaround Tuesday action, and that's what we were talking about yesterday. That's what it felt like, setting up for today. So we'll talk about that more as we go along. But as we can see here with crude oil, finding a little bit of a bottom, it's going to hold on to the 60 handle. I think that the demand is there to at least keep us in the 60s. I do not really see us, unless tomorrow's crude oil inventory number comes out way out of whack, folks. I think that crude oil is going to stay in the 60s, and we might start moving back to mid to lower 60s. We're at the mid to higher 60s, I would say right now. But when I'm talking mid to lower, I'm talking 62s in and around there. Come down and test this Fibonacci, the 78 Fibonacci they were looking at right there. All right, let's move on to the markets. Bonds, you know, they got below, what was it? 10-year was below 1.8, I think it was. I wrote it down somewhere because I can't do the math in my head that quickly. But basically, the 10-year was below 1.15. The bonds were below 1.8. So both interest rates dropping precipitously here. That's not due to the Fed buying. It's more in line with the fact that are the bonds signaling a little bit of frothiness here in the equities. And that's exactly what we were talking about a month ago, is that the price of the bonds was a little bit too high, despite the fact that interest rates were starting to look like they were going to start creeping higher there. I was talking about refinancing and stuff like that. Well, we're seeing the market start to revert, thinking that the equities may have a little bit of frothiness, and that's what I was talking about yesterday. Remember, we were talking about Tractor Supply Company having about a 24 forward earnings. Well, that is higher than the norm, which is usually gets a little bit frothy for a Tractor Supply Company, about 21, 22 times earnings. We're at 24, and that's usually a gauge of economic strength that we looked at back in the day in the grain room. It was more looking at the Tractor Supply Company numbers more so than anything else. And those numbers were pretty good, but they did disappoint on a massive multiple that they were expecting to receive from the investors. Gold futures is slightly off a little bit today. Nothing really to see there. It's going to have some strength here, folks, despite that we're seeing some levers and pulleys here. Flight to quality yesterday driving gold higher. Remember I said when we're seeing equities fall out, even though strength in the dollar, we could see gold futures start to pop because of a flight to quality. You pull it out of some names you're concerned about that have higher risk and throw it into something that is a more of a retainer of value, and that's what gold is generally considered. Bitcoin, not quite to that level, or Ether, or even any of the other ones. That's just really not gained that appeal across the board. Now, something we were talking about, I was expecting Bitcoin to hold on to this 30,000 handle here. We're starting to break below this Fibonacci. Weakness there, we are going to be looking to cover a gap, folks. Yes, that is something we need to even worry about with Bitcoin, is gap covers. Now, you've heard me talk about this before. It doesn't always immediately cover those gaps. It may take a very long time for a gap to get covered, but we are looking at one right now, and it's going to line up right in between these two lines there. You can see that little gap there. That, if I were able to draw a nice decent line, let's just call it right there. I'll just double that line. You can see where the volume profile has no volume in there. Well, that's because there is a gap. It never traded at those prices. Now, market technicians are going to look for this settlement below the 38. we are going to be easily looking at somewhere right around, it's going to, let's call it 23. Just a breakdown without me really getting into the details there on that number. 23,000 is a mark for Bitcoin, folks, to cover that gap. And if we settle below this Fibonacci, it's going to feel pretty weak. That's another $8,000 drop there in Bitcoin to hit that target. All right, so if you are long Bitcoin, I would be a little bit nervous, maybe doing some covered calls if you can on this. Something to lower overall cost basis is something that I would be very concerned about, because that gap is almost sure to get covered. All right, BIX, we are coming off a little bit as we're seeing some strength. On this turnaround Tuesday, we can see NASDAQ yesterday was being led by the tech sector. Even the Dow Jones Industrial Average today really seeing its upward momentum generated by some of these blue chips. IBM we'll talk about here in a moment. They just had earnings, but we can see NASDAQ finally piercing above yesterday's high there. So looking like a bit of a confirmation to the upside, risk to the upside for equities across the board. I would say for the remainder of this week, barring any type of crazy economic data or news coming out, I think that equities are going to be on the move higher here. We got the Dow Jones Industrial Average. You can see retracing almost all of yesterday's day. Yesterday was pretty bad for the Dow, but today, like I said, leading the charge to the upside is the tech names in the Dow. Ford's probably doing pretty well, helping them out as well. We'll talk about that here in just a moment, trying to rip through these fast. E-mini S&Ps, you can see overnight inventory was pretty flat. They fleshed themselves out. You can't really, they got long, short. So pretty much flat on the overnight inventory, which leads us into today. Well, not economic data that we're really charging off of. It really has to do with the overall markets just finding opportunities, is what it seems like. Yesterday was all about the Delta variant. Today, it's still there, folks, but people are looking for opportunities. Earnings coming out slightly better than expected, and we've been seeing better than expected earnings, but still seeing this pullback. Is this going to carry throughout? IBM kind of breaking that pattern there right now, making a move to the upside. Let's talk about NVIDIA. You guys remember the reason why I want to talk about NVIDIA so much is because, or first off, I haven't taken off the rest of this trade. As you can see, they're trading at 181. Holy cow. I'm short the 830 strikes there. In the short the calls, long the puts at the 830 strike to create that synthetic short. If you guys remember, I got long, or I got this synthetic short when we made that new high. I'm saying this is a topping pattern. Time to get a synthetic short, because that is a very bearish setup. Therefore, I was willing to take a little bit more risk. Well, we've gotten that sell-off. Well, and today it's actually a split, 4-for-1 split. So that means for every share that you own, you now own 4 shares. So let's just do the math here really quick on this. If I'm looking at me being short these calls at the 830 level and long the 830 puts, keep in mind when that splits 4-for-1, I have the 8, let's just call it the 830 strikes, okay? Because I'm long the calls, long the puts and short the calls. That means that I've created 100 negative deltas for this trade, okay? So for every dollar this underlying moves down, I benefit by $1 using the short strike. So if I divide that by 4, right, now my strikes are right around the 207.50. All right, so those are my new strikes. All right, but now I have 4 of those. All right, so my strikes were the 207 strikes. But remember, I had my break even because I paid a debit for that. It lowered my overall break even down to 206, which at the time of this trade, my break even was 124.20. I just rounded it to 124, folks, just to make my life easy. So now my break even, my new break even, is going to be 206. All right, $206 is my break even. And yesterday I was looking at getting out at 715. Well, what does that kind of equate to? My out on my last trades are going to be right around 178. Now, Right now you can see I'm obviously about $5, $6 away from that trade. Came pretty close this morning right off the open, came down a little bit tight, but not quite for my out on this trade. If the underlying starts trading around 178, I'm going to peel off a couple of more of these because now I've got 4. Remember, 4 for every one that I had, and I only had a third of my tranche left, but this gives me a little bit more wiggle room. I can play around with it, which is kind of nice. So I'm going to hold on to this a little bit more, see how this shakes out. But NVIDIA, keep in mind, the reason why I want to stay short in this NVIDIA, despite the fact that we saw yesterday's boom, is NVIDIA is really part of this mining operation. And with the mining operations really having this headwind of the environmental impact of these miners, these massive mining operations that draws on the electricity grid, well, that would drive prices higher for most people. You know, energy can become very expensive with the demand. So having said that, we're seeing a lot of backlash with some of these mining operations. As a matter of fact, I think I saw 10,000 computers basically run over by a steamroller. They're miners, but those little machines got crushed. So that is the backlash we're seeing over in China and the environmental impacts of some of this. So Bitcoin really taking it on the head there for that negative sentiment. But NVIDIA is going to follow suit because if people aren't creating more mining operations or creating more mining corporations where they have 50,000 mine, that's 50,000 video cards, folks. That's where NVIDIA is making their money. All right. And some of these other video card companies is being driven off of these mining operations. So NVIDIA, I'm still bearish on, especially in the near term. And then we can go over to a couple of other things that I wanted to talk about here. IBM. Now, you know, IBM is one of my favorites. But finally, they came out with better earnings. As a matter of fact, their earnings, I think they were the best in the last 2 years. What was it? The largest revenue growth in the last 2 years for IBM. And that's going to be due to the service, not the service sector. That's what they've been known for, but they've been getting over into the cloud services, and that's higher margin. So that's where they're, even though their money line, it looks like they're not making any more money than they did before on their revenue numbers. It has to do with that profit margin I talked so much about with IBM and the cloud services being a better business than their old service sector, because their old services is very labor intensive, whereas the cloud service is very hands off. All right. So IBM is moving a little bit higher, but seeing some weakness as the rest of the market starts tearing into these numbers, and they're saying, hey, it's all due to this cloud services, and it's seeing some weakness. But that's where I have long said and stated that IBM is going to do well in the future. So IBM, for the upside, I'm not going to play. But when we're looking at other ones, Intel, there we go. Intel Corp, I would play this before I would play IBM or possibly Adobe over NVIDIA for sure. Intel I would, Adobe would be something I would, because I think NVIDIA is going to suffer with people not buying 50,000 video cards, whereas Adobe is basically on all of our computers. Intel's on every computer outside of every computer has basically an Intel or some form of chip like that. So that's why I would stick with Adobe or Intel over NVIDIA. NVIDIA is being driven by the mining operations more so than anything else. And then if we're looking at the airlines, I talked about the airlines finding some buoyancy here yesterday, that the risk was to the upside in the airlines for the travel sector. But something I was talking about, I was looking at UAL and a couple of these other ones with a friend, and that's, you know, you should always have a friend or a mentor to bounce ideas off of, because sometimes you might have a little bit of a blind spot, folks, where this one, was pretty glaringly obvious. And, we were spitballing back and forth, but it was nice to see this come back on something that I kind of just spaced on for a minute. So if you guys don't have somebody that you trade with or talk about the markets with, you should find somebody. That is really something that every good trader has, because you need to look at a different perspective sometimes, because sometimes we'll get a little bit of tunnel vision or have that blind spot on the side that we just didn't see something glaringly obvious that could really harm us. So if you need a mentor, reach out to us at Pro Trader Strategies. I would be happy to chat with you guys, bounce ideas back and forth, just to make sure you're clear of all of the ancillaries. Not that I'm going to be able to clear all of that up, but at least you have a different perspective that you don't get that tunnel vision with. And something like UAL was one of those situations where I'm looking at the travel in the United States. I said that we were seeing some weakness, but we found some buoyancy yesterday. So is it overdone? Well, maybe it's an opportunity for a bounce here. So I was talking about UAL. Well, they're too much, they have too much international exposure. And if we're starting to lock down on travel into other countries due to this Delta variant, well, it could very well hurt UAL more so than, let's say, Southwest Airlines. Southwest Airlines is mostly domestic here in the United States. American Airlines does travel to Europe, so I would probably stay away from UAL and American Airlines. Now, Delta Airlines, yes, they are international. They go to Australia and they have other hubs as well. So Love would probably be the one that I would play to the upside if you wanted to add an airline to your portfolio, because I think that these are due to a bounce. And I think that Southwest is probably the one, if they start locking down international travel, that they would still be able to do well with their domestic. All right. So that's for the airlines. Ford is, I think, the best in class. They've been dragging, and I've talked about this with the chips, right? The Ford chips not being sent to the United States. I said they were producing them and that they were probably there, but they were just not going to ship them unless we found something that was going to increase production. Well, they just realized that the demand from everybody else wasn't as great as what Ford needed. And so now Ford all of a sudden has some chips. So I think that Ford to the upside has some pent up buyers demand. They've got Ford F-150s in parking lots everywhere in basically Kentucky and Tennessee. And they're just waiting for a chip. All they got to do is plug in this chip and they're basically good to go. And those chips are coming. So some of those Fords that are sitting in those parking lots are already spoken for, people waiting for those chips. And the other ones are basically going to be coming online very quickly. So we could see some of these used prices. We've talked about AutoNation up 54% year over year on these used car sales. Well, we could see some of that start to drop off as these new car sales start to move higher. So keep your eyes out for that. Stay diligent and mechanical. Ford, though, over something like GM, GM, General Motors, yeah, it could play to the upside, but I think that if you are looking for more upside potential, it could really be in Ford as a multiple. If you're thinking you could buy 100 shares of MGM, you could probably buy at least 400 or 300 shares of Ford. So keep in mind that that dollar is a multiple then for you. And finally, so we got Intel, Adobe for the chip sector or the computer sector, and IBM I think is looking good to the upside. Ford over GM and Love over the rest of the airlines is where I'm going with and keeping an eye on. Like I said, I'm waiting for some confirmation here today. GM, Ford, a lot of these other names have made that confirmation to the upside. So there could be some opportunities there if you're looking for it. If we're playing that to the upside, volatility is really low at this point, and we've gotten some earnings coming up around the corner. So it's a little bit dicey on that with the low volatility and earnings to come up with a play on those. So I'm going to sideline myself, at least for right now, and start to look at playing some of these earnings trades. So keep your eyes out for that. We'll be talking about those coming up. as we're hitting earnings season, that's the best time of year, right? All right, folks, I know this was a little bit long today, but I knew we had a lot to go over with this Turnaround Tuesday today. To play it to the upside, I thought I'd be able to find a couple of opportunities, which I did for you on those confirmations we were waiting for. I haven't added any trades, but that's because I'm trying to keep some powder dry for these earnings. That's about it, folks. Like I said, if you want to check out these videos, hit the subscribe button so you get a notification. I think you have to hit on the notifications down there. Send me some notifications when he goes live. We'll do that for you. And comment over there. I'll circle back around and make sure everybody's clear of concept. And finally, if you can't smash that, take that. Bye for now and take it easy.